Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're jumping into the charts for Ethereum, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you have not yet joined us in Discord, link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. And you know, if you're looking for a little bit more from the crypto space, why not check out the Cheeky podcast as well. Link is in the description down below. Fantastic way to stay up to date with all the latest in the crypto space on your commute to the office. All right guys, let's waste no more time. Let's jump right down into this. Right, so Ethereum paired up with USDT on the hourly chart, and Binance is our data source. Following on from our recent conversations about what's been going on here with Ethereum, at least in my opinion. Do remember that this is not financial advice, but just my personal opinions on the data in the charts here. But we have completed our zigzag pattern here, and if I just take a quick fib measurement here, we're just going to check something quickly, just for our own peace of mind. We're going to take that entire 100% movement of our first 5 waves, and we're going to put this down at the bottom of our 3-wave structure. Here we can see that we came up just a little bit north of the 618 and a little bit south of the 702, and not the 1-to-1 ratio. The 1-to-1 ratio would have been up there at 1,413. So a little bit shorter there, but nonetheless we are still, you know, within the realms. Basically the micro movements here are more important. We completed the zigzag pattern, which effectively is a 5-3-5 structure, or an A, B, and C. Okay, so essentially this basically does complete everything. Because we failed to even go to the 1-to-1 ratio, we have nothing to worry about here in terms of moving the price to you know, the 618 or 1.618, so it turns impulsive or anything like that. The only thing that we do have as a concern, it's the same concern that we have for Bitcoin, and if I bring these up, right, we have an overbought stochastic RSI on our hourly, so that's looking for decline. We have an oversold 4-hour and a pretty decent correction happening here on our 8-hour stochastic. So this is the one that's concerning, because a fast correction here could still lead us moving on up, right? So we'll have to check that out. But we are still overbought on the daily. So for the most part, you know, we're okay, but I am concerned over the 8-hour stochastic RSI, same way as we are for Bitcoin here. Now, essentially, what does this mean? Well, it means that we might have an overextension occurring here that leads us into another 5-wave move that could potentially mean that we found the bottom down here, right? And this is something, you know, we've been talking about, you know, Ethereum for a while. If I jump up into our weekly, we have our low targets, right? And we're taking a look at this structure, $700 to $800 based on those recent highs. And basically it comes from that all-time high down here into this kind of 5-wave structural drop. Now it's possible, of course, that it's a 3-wave drop. We just move on up and we go higher than 2,159, right? So if we were to go up higher than this yellow line just here, okay, that's a really bad arrow. But if we were to go up higher than this 2,159 you know, price low on this wave 1, then effectively there is no you know, wave 5 down. Okay, it just doesn't happen. So we should be cautious to a point, right? Because the structures that could form on our hourly chart it could lead us towards that invalidation and basically prevent those lows from coming in the same way that we have with Bitcoin, right? So my concern is, if I'm going to make this as neat as I can for you guys, I'm going to remove these. Okay, we're focusing in on this 5-wave structure. Okay, so by moving on down lower than the 4th wave, we've confirmed that this is the top of our 5th wave move, and we don't have to worry about any overextended 5th waves. But what we do have to worry about is a move where actually we have a 5-wave structure appear next, and it might seem like it's random, but it wouldn't be. So let's hypothetically say we just pull back a little bit lower, and then we have some kind of move upwards like this, right? And if this happens, what we've actually got is a Fibonacci measurement of this first 5-wave structure here. I grab it there, move this over to our correction, which I'll just put down here for now as it's hypothetical low. And, you know, we maybe move up to this 1,500 and let's make this a little bit more. So maybe I just do something like this. Grab that 5th wave like that. We go up to this 1.618. This 1.618, effectively what it would do is it would turn this into a wave 1, this into a wave 2, this into a wave 3, Then we have a wave 4 down and a wave 5 up. And potentially what this is then doing is on our slightly larger scales is we're creating ourselves a structure that is basically much more bullish. So for example, what you'd then have is effectively a wave 1, a wave 2, a wave 3, a wave 4, and then a wave 5. And you can see how we might actually then end up going higher than 2,159. Okay, so from a structural point of view, we should be slightly concerned, and the really concern is that our 8-hour stochastic RSI has corrected as fast as it has. It shows the momentum behind the price action. So it's possible that this does unfold, right? I think there's a low possibility of it. I think there's a higher probability of downward price action, but I do want to kind of articulate that there is other options out there that could actually see complete reversal. And what this would mean is the bottom for Ethereum would be in, right? And we don't have those additional lows that we've been talking about. But until, of course, you moved up higher than 21,559, you can't be 100% sure that we finished the structure down here. However, I do think that if we actually hit this 1,587, I think we can be pretty confident that things are likely to change for the better in terms of the price, right? But my expectation at this point in time is still downward price action. Okay, so I'm still expecting the price to pull back down into those lows, but I do want to kind of articulate that it's possible that we have this structure and the reversal patterns starting to emerge. Okay, so I'm going to tidy this up and just wanted to kind of leave that there as something to keep in people's minds, right? Because I'm going to talk now about what I'm expecting to happen, or what we want to be looking out for, right? I'm just going to put these back in here so that we can see these structures, right? So if we have this 535 structure up here and it is complete as expected, or as we've had articulated, we've moved back down lower than our wave 4 here, and what we're expecting, or what we should be looking to expect, is some kind of 5-wave structure to the downside. Okay, so that's kind of what we're looking for. So on this note, we are looking for a small push up higher. We could have a leading diagonal in wave 1, that's fine, but we will be looking for a push higher. We want to avoid going higher than 1,280. If we go up higher than 1,280, then I think we might be looking at that overextended move to the upside. Okay, and it's also possible maybe that this here is our wave 3. There's a few things that we're going to have to watch out for. Okay, so if we do go up higher than 1,280, I will put out another update that will explain more about what that is looking like at that time. Okay, so make sure you're subscribed, hit the bell and all that stuff. But I don't want to kind of confuse too much in this video, but if we do go up higher than that, it does change a fair amount. Now, we've dropped down lower than wave 4. So this line here, that's perfectly fine. I can delete that. We don't have to worry about that anymore. The next thing that we're looking for to kind of confirm our downward price action and to prevent those bullish sentiments that we were just talking about, i.e. that push up higher, we have to drop down lower than the origin of these 5-wave moves. Okay, so for that to happen, we have to go down lower than $1,043. Okay, so this little yellow dash line at the bottom here is now very important to us. It's important because it confirms that we can't have, under that impulsive structure that I just showed you to the upside, it couldn't happen because there's unbreakable rules within Elliott wave theory that would prevent it from happening. So we couldn't necessarily go up in that wave structure. We could go up in a different wave structure, but we couldn't go up in the structure that I just showed you. So moving down lower than 1,043 is actually quite critical in getting us down towards our lower targets of $600 to $700, or sorry, $700 to $800, right? So very important that we actually lose this area, and it confirms our downward price theory. Okay, so very important that happens. Now, this first wave 1 here should be broken down into 5 waves, but wave 1 can be actually a leading diagonal where you actually have a lot of overlap, where the price doesn't really know what it's kind of doing. It's a little bit confusing because a lot of people who are trading this space aren't confident that we might go up a little bit more. Some people might be thinking, oh, we hit the top, we're going to go to the bottom. So basically it's a very confusing wave, and therefore it's usually actually one of the shorter ones, but in a leading diagonal it actually tends to be a little bit longer. So here we could be looking at a lot of overlap and just looking for that little bit more to the downside before we actually have a relief bounce. And again, the relief bounce is then kind of coupled with a bit of FOMO, but usually the it goes with the trend, which is going to be down in that case. But wave 2 never crosses 1,280. It's an unbreakable rule, so it's not allowed to happen. So if it does, I'll obviously do an update about that. Now, the pull down should then be at least 1.618 in my opinion, but we could obviously have a look at different kind of structural points, and then obviously we continue this motion to the downside. Now, our low targets are reasonably low, so we could be expecting maybe something like this, where we end up with a kind of smaller 5-wave structural move, then we kind of see ourselves with a 3-wave bounce, and then we see ourselves with another kind of, deeper kind of correction coming on down into this kind of low, and then of course another 3-wave bounce, moving on up, and then a final 5-wave move down. Okay, so our targets are down here somewhere between 700 and 800. The subwave counts are going to be more important, but the point of me showing you that is that essentially that it's going to be messy. It's not going to go in a straight line. It's going to be lots of movements up and down, but the general trend will be down as long as we cross $1,043 in my opinion. Okay, so that's kind of where Ethereum is right now, and my concerns really are around the 8-hour. Now, the daily stochastic RSI though is of course overbought, so a decline is very, very likely here, and it does fall within our structure of a wave 1, 2, 3, and again we have a 5-wave drop, we have a 3-wave move up, we have a 5-wave drop. We're looking for a 3-wave move up, which we've had within our ABC structure, so our expectations should be a 5-wave drop down. We are getting very, very close to finding that bottom essentially. A 5-3, 5-3, 5 structure to the bottom with all the subwave counting that we've done, all marrying up. So the probability is that we move down, but I did want to kind of articulate that there's that one concern I have, that we are potentially moving on up, and maybe the bottom is already in. Maybe this is not a 5-wave move, maybe it's only a 3-wave move, and with an overextended C wave. But I think essentially it's important that we reflect on the probabilities here. Yes, there's a probability that we move up in that kind of really impulsive trend-setting pattern that I showed you at the beginning of the video, but I think there's a higher probability that we finish off the pattern that's already in play, and that we actually see the decline towards our targets of $700 to $800. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.